So taking into account the new 3.95% interest rates that are available at quite a few of the different banks at the moment, some of the banks that are not advertising these low rates still might be offering them behind closed doors. So a lot of you might be thinking, should I break and refix my mortgage? Or should I consider refinancing, getting some new rates and a cashback? So one of the things I want to explain to you guys before you take any action with breaking your mortgages is what's the difference between a break and refix and refinancing. So I personally just broke and refixed my mortgage. I didn't switch banks. I got over a mil, closer to 1.5 mil of lending. So what happened was last year I bought a property. The interest rates have come down quite a bit. I'm still in my cashback period, but what I wanted to do was lock in some certainty. So I decided I should have a look at whether I should get break and refix. So I requested mortgage rates through one of my business partners, and we got some new rates from my bank. I paid the break fees. It was about $4,000, and over the course of the next 3 years, I'll save $7,000. So there was a little bit of an arbitrage play there, where the break fees, that or also known as the early repayment costs, were lower than the relative higher savings I'm getting from having lower interest rates. So why would you break and refix? Well, you want to lock in that certainty of having the lower rates for an extended period of time. It's a good opportunity now that the rates are at a record low. It was on the front page of the Herald, 70-year record low. Rates are not going to be under 4% forever. And if we had to pick, probably in 5 years' time, they'll be much higher than that. So take advantage of the opportunity now to consider whether you should break and refix or refinancing. And just take into account that if you do want to buy more property, the current interest rate that you're on does factor in with some lenders on your borrowing power. So bringing the rates down actually will help you borrow more money if that's what you want to do in the short and medium term future. So if you're still in a cashback period, maybe you got cash in the last year or two, or you've got staggered cashback periods, it's really important to spreadsheet out whether you should break and refix or refinance. And if you've still got current cashback, its odds are that you probably shouldn't refinance, but you should let the numbers decide for you. You might have 2 or 3 grand of cashback owing if you switch, but if you've got more than $1 million of lending, like you're probably going to get 7+ grand of cashback for changing. And in the case, like if you get a mortgage advisor, iRefi, we do KiwiBank as well. KiwiBank pay the legal fees, so the 7 grand is immediate upfront savings, cash in your account. And with the lower rates, if you keep repayments the same, it's further contributions towards your principal, or you can pocket the rest and save a bit of extra on the lower repayments. So one thing that you would consider if you are going to refinance is if there's strong secondary motivators. So if you've got other debts from credit cards, personal loans, car loans, second mortgages, anything like that you want to consolidate into the mortgage, then it might make more sense to refinance and reset things. If you want to rebalance or extend or change any of the mortgage terms, sometimes it makes more sense to refinance rather than stay with your current bank. But you've got to be working with a mortgage advisor that understands that changing banks is not always the best thing to do. It seems to be the default. Most brokers in the market are pushing for a bank change or a bank switch. Often if they don't have access to all of the lenders, they might not even have good relationships at the bank that you're with. So the thing to take into account is current debts. If there's any other debts, that's going to be a factor, making sure that you spreadsheet that out as well. If you want to buy more property, it's important to be with the bank that's going to allow you to keep borrowing, or at least have structures set up that's going to facilitate that. If you are thinking about restructuring in any way, maybe you want to remove a borrower, add or change guarantors or lenders, you might want to move your property that's in personal name into an LTC, or a trust. So that's an important thing to take into account when you're doing analysis on breaking and refixing or refinancing. And cashback. So do you have current cashback or current cashbacks that need to be factored into the analysis? So one thing that I would strongly recommend before you do any analysis of breaking and refixing or refinancing is to get your hands on a spreadsheet. And so at iRefi, we've got quite a few tools that will help. If you would like to get a spreadsheet that allows you to assess whether you should break and refix, just send me a private message or send me an email, andrew@irefi.co.nz. And if you request the loan details or have them on hand, just take a screenshot of your bank summary, send them through, then I can at least make sure one of our team can put the correct numbers into your spreadsheet. And there's no cost or obligation. If you want to do things yourself or with your existing mortgage broker, by all means, that's fine. But at least the numbers that you're looking at are accurate, because sometimes even people that are really savvy with the numbers can get a little bit confused when assessing whether break and refix makes sense. I'll give you an example. Recently, we just helped a family. There's 5 of them, different loans. It's about 10 mil of lending. And so we had to do break and refix analysis for all of the different entities. There's about 6 or 7 of them. So break and refix summaries and spreadsheets, and then a different spreadsheet using similar numbers but adding in the extra cashback if you switch for refinance summaries. So you typically wouldn't be doing this on the same spreadsheet. You'll be comparing a break and refix offer, whether you should do anything or not, and a refinance offer. And that refinance offer, again, important to be working with someone that knows what offers are available at all lenders. Thanks.